It's taken 4 years for interest rate cuts to return to the scene. So the big question is, should you make some money moves too? I'm 7 News consumer anchor Diane Lee with how the rate cut can help your finances if you know how to take advantage of these changing times. From your credit card to your mortgage, a lot of expenses are more bearable when we don't have to pay as much to borrow money. So when interest rates drop, there are a lot of winners.
So we're looking to buy a vacation home soon, and so I hope that will help if we need to get a mortgage.
And with interest rates cuts, that's going to be something that's going to allow us to actually get new vehicles. So I'm extremely excited for it.
Of course, there are losers too. Anyone with a lot of cash in savings accounts. And that's why couples like Chris and Leslie Knoxstead in Spartanburg are looking to change things up.
I've been putting money in savings instead of putting it into the stock market. Well, now I might move more to the stock market because now I can get a higher return on it on that side.
So the interest rate change is a call to action for you?
Yes, definitely.
A sound move, according to financial advisor Dan Foster, who says generally when interest rates go down, stocks tend to rise.
Broadly speaking, if you have a 3-year time horizon right now in a lower interest rate environment and a good earnings environment, you're going to have good returns in your 401k plans or your personal accounts or what have you.
So this is actually a good time to potentially invest more?
Yes, absolutely.
If you think you may need to access that money before 3 years, a safer bet may be shifting your savings to a certificate of deposit. Those CDs offer a shorter timeline and a guaranteed return.
Some credit unions and banks have already started adjusting it a little bit.
Terry Hendricks with Carolina Foothills Federal Credit Union says unlike savings accounts with adjustable rates, CDs offer a fixed rate.
You may want to go ahead and lock in somewhere if you've got a larger amount of savings.
Now, I know we all want to see those credit card rates drop, but money experts say that will likely take some time before those start to noticeably decrease. As for your car or home loan, that's currently a mixed bag.
So is now the time to refinance?
Well, on your mortgage, your home loan, I would say a good rule of thumb is it needs to be a full percent lower than what you currently have. And that's because you're going to have to pay closing costs again and other document fees.
But when it comes to the car, what then?
Car is a lot easier to do, and it may be worth your while to go ahead and refinance your car.
Keep in mind, this is likely just the beginning. Rates are expected to drop another 0.5 percentage point by the end of this year, a full point next year, and another half in 2026.
So if not today, refinancing might make sense in the coming months or year. For Knoxstead, who just bought a new house, that full 1% rate drop can't come soon enough.
I mean, it's going to definitely change our outlook on what we do financially.
Now, want to know who the biggest winner of all is? It's actually the federal government, because the Fed borrows a lot of money. There's $35 trillion of debt right now. So lower interest rates mean the government spends less, and that can be helpful for our economy.